Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to run. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of our way, let's get started. In today's video, I'm going to talk about the top 5 consistent compounding stocks in India. You see, finding stocks that consistently grow and generate wealth is crucial for investors. While the Indian market is full of options, only a few companies have the consistency to maintain superior performance over time. The key to success isn't market timing, but picking companies that consistently grow earnings and maintain a long-term competitive advantage. By investing in such companies and being patient, you can achieve great returns with low volatility. So let's dive in further and look at the top 5 consistent compounding stocks in India. Please note that these stocks are filtered using Equitymaster's Power Stock Screener. First on our list is Bajaj Housing Finance, a non-deposit taking housing finance company that offers financial solutions for purchasing and renovating residential and commercial properties. The company's mortgage products include home loans, loans against property, lease rental discounting, and developer financing. It primarily focuses on individual retail housing loans, supplemented by a variety of commercial and developer loans. Coming to its financial performance, the company has delivered a sales compounded annual growth rate of 34% over the last 3 years period and a net profit CAGR of 56% for the same period. Because of the Bajaj parentage and decent financial performance in the recent past, the company listed a pretty expensive valuations of more than 6 times its book value, and since then it has struggled on the stock exchange. Looking ahead, the company's management projects a medium-term AUM growth of 24 to 26%. It anticipates retail segment growth driven by its strategic focus on near prime and affordable housing. Disbursements are expected to remain stable with potential for growth in the retail sector. The cost of funds is expected to remain stable and have possibly peaked. Coming second on the list is Trent, a retail company in India that operates in multiple segments including fashion and grocery. In the fashion segment, it has brands like Westside, Zudio and Utsa. Trent also has associations with Inditex for operating Zara and Massimo Dutti stores in India. In grocery retail, it operates Star Market stores through a joint venture with Tesco plc. Coming to its financial performance, the company has delivered a sales CAGR of 36% over the last 5 years period and a net profit CAGR of 57% for the same period. The 3-year average return on equity is 15%. Trent's share price is also appreciating the stupendous growth. Looking ahead, Trent's outlook is positive with substantial growth anticipated across its retail formats, particularly driven by Zudio's expansion in the fast fashion segment. Zudio is expected to maintain its market leadership in the fast fashion space through its private label strategy, differentiated fashion and reasonable pricing with substantial growth in store numbers and sales. Westside is expected to contribute steadily to the overall revenue with consistent store additions. Trent is expanding its portfolio with emerging brands like Mispo, Samo and Utsa and venturing into beauty and lab-grown diamonds. It is focused on organic growth while also strategically expanding its presence through Star Bazaar and partnerships with Zara and Massimo Dutti. Nevertheless, the investors should note that company's growth is not without potential risk. It faces increasing competition in the fast fashion and value segments and must maintain its edge through its product offerings and pricing. On number 3 comes Indus Towers, an Indian telecom infrastructure company that deploys, owns and manages telecom towers and communication structures. It is the largest telecom tower infrastructure company in India. The company provides passive infrastructure services to telecom operators and other wireless service providers across India. Indus Towers provides access to its towers primarily to wireless telecommunication service providers on a shared basis under long-term contracts. The company has a nationwide presence with operations in all 18 telecommunication circles in India and caters to all wireless telecommunication service providers in India. Coming to its financial performance, Indus Towers has delivered a sales CAGR of 33% over the last 5 years period and a net profit CAGR of 21% for the same period. The 3-year average ROE is 22%. But the stock price CAGR for 5 years is only 8%. Indus Towers has faced challenges in the past, primarily because of customer payment issues and debt. It experienced significant issues with delayed payments from a major customer, leading to substantial provisions for doubtful debts. The company's profitability was impacted by the need to make provisions for doubtful debts and the inability to collect payments on time. But now, things seem to be changing for the company. It has made significant progress in collecting past dues from a major customer. As collections have improved, Indus Towers was able to write back provisions for doubtful debt, boosting profitability. The company has reduced its debt, which is a result of good cash flow from better collections and lower capex. It also is benefiting from network expansion by major customers, leading to increased tower and co-location additions. They are also actively participating in network expansion with BSNL. The company has a strong order book and expects to continue strong growth. Moving on, fourth on this list is another Bajaj Group company. Bajaj Holdings and Investment is primarily a holding and investment company. It functions as a systematically important non-deposit taking, non-banking financial company registered with the Reserve Bank of India. Its main source of income is dividends from its investments in group companies. It holds significant investments in Bajaj Group companies. It has a 36.68% stake in Bajaj Auto and a 41.56% stake in Bajaj Finserv. These companies, in turn, hold significant stakes in other Bajaj Group companies. Since the company is not involved in manufacturing or industrial activities, its financial performance is entirely dependent on the companies it holds. Bajaj Group companies have done well in the past decade, which has resulted in good financial performance for Bajaj Holdings and Investment. The company has delivered a sales CAGR of 32% over the last 5-year period and a net profit CAGR of 19% for the same period. The 5-year average ROE is 12%. This has translated well into stock price returns for its shareholders over the decade. The company aims to maintain a minimum dividend payout of 50% of its distributable profit each year. Last on the list is LTIMindtree, formed by the merger of Larsen & Toubro Infotech and Mindtree. It offers a wide range of IT services, including cloud infrastructure, consulting, and data analytics, and serves various industries. The company has demonstrated strong financial performance over the past few years. It has delivered a sales CAGR of 30% over the last 5 years period and a net profit CAGR of 25% for the same period. The 5-year average ROE is 29%. This compounding of profits at good ROE has reflected well into the stock price over the past decade. Looking ahead, the company anticipates the growth momentum from previous quarters will continue into Q4. FY26 is expected to be even better than FY25. It has a healthy deal pipeline. The company reported its highest ever order inflow at $5.64 billion in FY24, representing a 15.7% increase over FY23. The deal pipeline has seen a promising increase in Q3, supported by client focus on cost reduction and vendor consolidation. LTIMindtree is employing margin levers, including cost optimization and pyramid optimization. Nevertheless, the market environment is still considered cautious. Political and economic uncertainties persist, making it challenging to predict spending trends. So there you go. These were some of the top consistent compounding stocks in India. Here's a table showing the above stocks on important parameters. Investing in consistent compounders can be a rewarding strategy for long-term wealth creation. The 5 companies highlighted, Bajaj Housing Finance, Trent, Indus Towers, Bajaj Holdings and Investment, and LTIMindtree, have demonstrated strong financial performance and steady growth. While past performance is not a guarantee of future returns, these companies have exhibited resilience and strong fundamentals, making them worthy of closer analysis. However, investors should conduct their own due diligence, considering factors such as valuation, industry trends, and market risks before making investment decisions. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. This is Zil from Equitymaster. Thanks for tuning in.